Yeah, well, thank you, Matt. Uh, Glad to be back with you. As Matt said, this is the second in a four-part series that your association has been so, gracious enough to allow us to come and speak to you, the members of DAR. And, I'm sort of a local guy. As you heard, I'm here up in New Jersey, not too far away from Delaware, right across the river from Philadelphia. So I can get down into Delaware pretty quick, 40-45 minutes. So, I know your area, love Delaware, like to visit it, and really appreciate doing business with your association and with the SHA. And, we also have the man, the myth, the legend, Bill Salamone, uh, who's with the Delaware State Housing Authority. And, we'll save him for the second part of the discussion here. And again, name is James Hall. You can call me Jim. My contact information is there under my picture. It's James_Hall at FreddieMac.com. In case you ever have a question or a need, please reach out to me. I'm an affordable lending manager. And what that is, I interface with housing finance agencies up and down the East Coast, from Maine down to Florida. And what I do, I interact with business development managers like Bill Salamone, and we put together, business development strategies to get out and raise awareness of our affordable lending programs. So it's a real challenging job in these times. I know as realtors, you're really up against it, with the inventory issue and other factors that are coming into play. With inflation, where market values of homes have really skyrocketed and have really put the first-time home buyer in a situation where they don't have a lot of leverage. And also we have a rising interest rate in environment right now that raises the amount of principal and interest that the mortgagers are paying. So that's another challenge we're up against. But we're all in this together, and we'll get through it. So I'm going to give you a little history of Freddie Mac. We've been around for 52 years now. We were chartered by Congress in 1970 as a government-sponsored enterprise. The acronym in our industry is called a GSE, and we operate in the secondary mortgage market. So we're not a company that makes loans directly to the public. Okay. What we do, we're mission-based, and we provide liquidity, stability, and affordability in the marketplace. So that liquidity is where we purchase loans in the secondary market from housing finance agencies like the SHA and lenders in the marketplace. So that allows them to go out and make more mortgage loans and keep them solvent and stable. We also have community missions. And one of our major community missions right now is to bridge the wealth gap and the home ownership gap that is existing with African Americans and Hispanics, versus white Americans. So we've set up a specific department to address this issue and to strategize, because this issue didn't come about overnight. It's been decades in the making. And it's going to take some time to correct. But if we ignore it, it won't be corrected. So Freddie Mac is, at the forefront of, really, getting together with their partners like housing finance agencies, lenders, realtor associations, and minority trade groups to really tackle this issue. We have three main business lines, and they are single family, multifamily, and capital markets. I'm in the single family division, and we define that by 1 to 4 unit sale properties. So these are the 4 pillars of Freddie Mac: insights, education, mortgage products, and business solutions. Insights, again, that's a lot of, think tanks, thought leadership, being prepared for what's coming at us in the future, and looking back on what worked and what didn't work in the past. So we have a great data analytics group that provides us a lot of information, which we share with our business partners, to help them understand market conditions and also be able to build their business strategies. Mortgage products, that's what we really, pride ourselves in. And what we do is, we have an affordable suite of mortgage products, which we'll go over a little bit later in this, that lenders can use through housing finance agencies that provide low down payment options. We also have business solutions, which are, resources and tools for realtors, lenders to use, and everything that Freddie Mac, puts out there is free. We don't ask for any fees for any of the tools and resources that we provide to realtors and lenders. It's a great resource to have, and hopefully you'll be able to use some of these items and appreciate them in your daily business lives. And then education, and really that's why they have people like me on the road and coming to you via Zoom and other virtual platforms. We're trying to, again, to be at the forefront of raising awareness and educating not only the industry but consumers, because what we find that financial literacy is lacking out there. I remember when I was in high school, and it was a long time ago in the 1970s, we had courses that really helped us, balance checkbooks, understand a debit and a credit, get you ready for electric bills and water bills and things like that. And I saw when my children were growing up that nothing like that was really, really promoted, in the educational system. So the millennials that are coming out in the marketplace right now really need help from, professionals like us to educate them, on, what it's like to be a homeowner, what they have to prepare for, what you need. You need a rainy day fund. You don't know when, the water heater is going to go, or your lawnmower is going to go, or things like that. And you have to have, the ability to be able to replace these items to make sure that, your property is maintained and stays in good condition. So, financial literacy is key. We have a great online program called Credit Smart, which is free for the consumers to use. And it really takes them through, the whole process. And it can be done, on their pace, because we know the millennials right now, they're really getting their information through social media. TikTok, Instagram, is really large for them right now. It's funny. My daughter, who's 26, she tells my wife that YouTube is for old people. Or I'm sorry, not YouTube. Facebook is for old people, and that burns my wife up. So, but YouTube is really, really being used heavily for educational purposes by millennials. So, if you're, on YouTube, on TikTok, on Instagram, you're ahead of the curve. You're speaking to that, present and next generation of home buyers out there. And if you're not, I highly suggest that you get on there, because if you're not, you're only going to be really speaking to people like me who don't use it. So just words of wisdom, and and it's what we see out there in a lot of the the information we're picking up from the millennials out there. So again, the affordable ecosystem is what this is all about. And there's many hands in the transaction, and you being a realtor, you're at the genesis of the transaction. So it really starts with you, the loan officers, and the housing counselor. So as I mentioned, the better educate the first-time home buyer, the better they're going to be, because a lot of them are coming, to us really not knowing everything that's involved in the process. Again, like I said, they're going on YouTube, they're going on Instagram, they're going on TikTok, and they're getting information. But the human element is really never going to go away in our business. They need to speak to a realtor like you. They need to gain trust. You're a fiduciary for them. They have wants and needs, okay? They may want something, but they may not be able to afford it. So you as a realtor has to look at it and say, okay, I got to talk you, off of this ledge here. You don't need that fourth bedroom. Okay. A 3-bedroom is a good starter house for you. And you got to present, this is what you need. And then, and really walk them through the process and say, 5 or 6 years, you can go up into a trade up type situation, buy that bigger house, as you're having children. So again, a lot of it is, being there for them, gaining their trust, and being a counselor for them, and finding the most affordable house, that meets their needs. And again, as a realtor, you need to have a synergy with a loan officer, because the loan officer is going to find the most affordable program for them also that meets their needs. And if your loan officer is not, performing that function, and you feel that they are not, really, presenting the best mortgage product out there for them, then it might be time to, spread your wings and look for other loan officers to work with, because there's many out there. And again, housing counselors, are great also, because they are there for, the educational purposes. And then you have housing finance agencies, which is down at the bottom of the screen there. And, they're in the market. They're like a mini Freddie Mac, okay, like a secondary mortgage market company that's providing the programs to lenders and buying the loans from them and providing the liquidity. So it's a complex ecosystem, but hopefully this chart here, will make some sense out of it for you. So we're here to talk about housing finance agencies. Like I said, we have Bill Salamone from Delaware State Housing with us, and we're really proud of our partnership with them. So, housing finance agencies have been around a long time. And as Matt had mentioned in my introduction, I worked at the New Jersey Housing Finance Agency up here for 12 years prior to coming to Freddie Mac. So housing finance agencies are near and dear to my heart. They really were born out of the 1960s. Lyndon Johnson was president at the time. His vision for America was the Great Society. He's famous for signing the Civil Rights legislation in '64, the Voting Rights Act in '65. A lot of people forget that he signed the Fair Housing Act in '68. And the Fair Housing Act had major affordable housing and affordable lending components. But Johnson's administration knew they couldn't do it all on a federal level. So they took it to the states and the counties throughout the country and said, hey, we need your help, to cure this affordable housing issue here. We need to help lower to moderate income folks attain the American dream and become homeowners. Will you help us? And states bought into it. And, every state in the union now, has a housing finance agency. And there's even some states that have county housing finance agencies. The housing finance agency that I worked at in New Jersey was born in the late 1960s. Some were born in the 1970s, and some were born in the 1980s. Bill will be able to tell you when Delaware State Housing was created, but it was through this wave. And if you remember the first screen, Freddie Mac was created in 1970. So we were created through that wave also, after the Fair Housing Act. And one thing we're very proud of is that, housing finance agencies have delivered more than $500 billion in financing within that last half a century, to help first-time home buyers, achieve that American dream that I mentioned. So housing finance agencies, they're all different, all over the country. They're not the same. They all, have their own mission or chartered. They have board of directors, and they work differently. So if you work at a large lender and or I should say, if your loan originator works at a large lender and they, are going in multiple states, they will know that there is a big difference between, say, a housing finance agency in Delaware and one in New Jersey. It's just the way it is. But they all have a common theme, and that's down payment assistance. And really, that has been critical, to their, marketing throughout the last 50 years. Because as we know, first-time home buyers are usually, struggling with cash assets. And that's where housing finance agencies can fit in and provide them the down payment assistance that will help them, locate a realtor that will help them buy the affordable home that they need, and also, more importantly, get them out of the renter ranks and get them out of mom and dad's house, and get them on the path to home ownership. And Bill will be able to talk about the down payment assistance programs that DSHA offers. And I mentioned earlier that Freddie Mac has a community mission, and that's to bridge the wealth gap between African Americans and Hispanics versus white Americans throughout the country. Housing finance agencies have been doing it for years. So that's why they're a perfect partner for Freddie Mac in this endeavor. And this is an important graph that really conceptualizes and visualizes for you where housing finance agencies have been the last 20 years in providing loans to people of color. So the red line there is the percentage of loans that housing finance agencies have made in the last 20 years versus the blue line, which is the market. And as you can see, there's many years where housing finance agencies have been either at the market or above the market in making loans to people of color. So again, helping us meet our housing goals in this regard is critical, and Delaware State Housing is a great partner in helping us achieve this. So what Freddie Mac did, we created a program called HFA Advantage, and this is our most affordable program in our product suite. And lenders can only use HFA Advantage through a lender that does business with Delaware State Housing. And what does that mean? If they're a Freddie Mac approved lender, they can't deliver HFA Advantage directly to us. And we did that specifically so the lender can help the first-time home buyer with this program, go through a housing finance agency, and use the down payment assistance that they provide. So it's a more affordable program, believe it or not, than FHA, because it's a 3% down program. FHA is 3.5% down. So we're more affordable in that regards. And the other items on the screen there, there's home buyer education, which is a requirement, and the HFA determines that. But it's like I mentioned earlier, education is critical for the first-time home buyer. We do have reduced mortgage insurance on this program, which is another key element that makes this program the most affordable program that Freddie Mac offers. So on a standard 3% down conventional loan, if you look in the bottom right-hand corner, the mortgage insurance requirement is 35%. We've reduced the mortgage insurance requirement on this loan for people that are 80% area median income and below, it's lower to moderate income folks, to 18%. So we've cut the coverage almost in half. So what does this do? It reduces their monthly mortgage insurance payment almost in half. So again, a great affordability issue for lenders to utilize and realtors to know about, that this option is out there, in the marketplace. And how's it line up against an FHA loan? Well, if you're familiar with FHA loans, the mortgage insurance is very costly. They have a very expensive upfront mortgage insurance premium, which is usually thousands of dollars, and the monthly mortgage insurance payment stays on for the life of the loan, so it's perpetual. On an HFA Advantage loan, which is deemed a conventional loan, okay, the mortgage insurance monthly payment can go away when the loan-to-value ratio goes below 80%. So it's not perpetual like an FHA loan. So it's a great advantage. And also, we don't have the upfront premium, which saves thousands of dollars. Now, I'm not naive. I know everybody doesn't qualify for a conventional HFA Advantage loan. I'm not here to bash FHA. I mean, they have an important product that's important in the affordable ecosystem. But if you find out that your lender is not offering this conventional program to people who do qualify, then they're not performing their fiduciary trust for the consumer. So just please make sure that your loan originator that you're working with is offering this program. And again, it's about, providing affordability and the best option, to the consumer. And, Matt will give you a copy of our slides here, so you don't have to write this information down, but at the bottom is the web address for our HFA Resource Center. It's a very important page. It's like a one-stop shop for you that has all the information regarding housing finance agencies that Freddie Mac can provide to you. Please take a look at it after this webinar and bookmark the page if you feel that it will add value to you to go back and get information. But it's got a lot of great information on there. It will tell you about related events that we're having. You can be able to download presentations from past events. It has podcasts on there, so a lot of great information. So please check that out. And again, as I mentioned, we have great resources for you. I recommend that you take a look at My Home, and again, the web address is on the bottom right-hand corner, and it's a website for consumers. So you'll be able to provide this, to your potential home buyers. It will help them through the, understand the process, and it's just, more information for them to be better educated. And then they'll see that you're looking out for them, and you're trying to provide them resources, that will help them better understand that affordable ecosystem and to be, clear the path of home ownership for them. And I mentioned education. Credit Smart is our marquee product. It's been around for 20 years. It's for the consumer to use, and it has many, many modules in there. It really, help them out as far as not only understanding home ownership, but just being able to budget and manage money. And again, a great program. It's free for your potential home buyers. So it's another resource that you can present to them and recommend. And again, the web address is in the bottom right-hand corner. And within Credit Smart, we do have some modules that specifically focus on home ownership. It's called Home Buyer U. It's 6 specific modules. It's available in English and Spanish. And again, another great tool for you to utilize to recommend to your potential clients. And our affordable lending insights, I recommend that, you sign up for this. You'll be able to get, great information, news and updates from Freddie Mac. We promise not to spam you, but, this is information that is, relevant, up to date. It may help you build, your business strategies. And again, it's at no cost. It's the GSE offering information to you. So, another great tool that we offer to our business partners. And also, this is specific for realtors like yourselves, the Real Estate Professional Resource Center. Again, it will help you grow your business. You can look at the information that Freddie Mac provides as far as providing industry trends, key topics, will drive business for you and then empower your clients. So, again, it's not a spam type of issue here. It's only informational. And Freddie Mac prides ourselves in providing this information to real estate professionals like yourselves. So with that, I would like to say thank you. It's always great to be able to talk to the realtors in Delaware, and also great to partner with Matt. And then we're going to talk about the great gem that you have in your state, DSHA, and Bill Salomon's a veteran of the industry like me. He's has a wealth of knowledge for you. So sit back and enjoy. And Bill, it's all yours.
All right. Thank you, Jim. Thank you very much. And thank you, everyone, for attending today. We appreciate your time and your commitment to educating yourself so that you can better deal with the challenges that you face every day. We have a great partnership with Freddie Mac, and Jim and I certainly have a good partnership together. what we find is that, as Jim has mentioned, there's a couple advantages to the program. However, many loan officers and mortgage companies are so used to writing the government program, your FHA and VA, USDA rural, they forget that the Freddie Mac product has a couple advantages. Again, as he said, lower down payment, but the biggest issue is the mortgage insurance. By having that reduced mortgage insurance premium, that allows the debt ratio of the prospective homeowner to have a greater buying power than if they use an FHA loan. So although the interest rate may be higher on a Freddie Mac loan than a government loan, when you use that reduced mortgage insurance, the total monthly payment will be actually much less. So again, very important to remember that. If Matt is on, Matt, can you bring up my presentation by any chance?
Sure. Hold on one moment.
Yep. Also on the presentation today, you're going to see a couple charts for income levels and sales price levels. Please do not try and memorize them. You will see the website listed on there where all that information is available. I'll give it to you now, www.downpaymentresources.com. Excuse me, that's a different one. www.kishalandlordgoodbye.com. www.kishalandlordgoodbye. So everything you see there will be listed. It'll be fairly straightforward to you. And Matt, are you giving me control of the screen or do I got to request it?
I'll handle it.
Okay, super. All right. Again, there's the information that we're going to go over today. So if you'll start that slide, please, Matt. I do want to mention, though, before we get into the presentation, that the Fair Housing Act that was discussed by Jim, I will say this. He mentioned that this was done in 1968. Delaware State Housing Authority was one of the first of the HFAs created in 1968. And we've been doing the home ownership initiatives ever since. And we're committed to that 100%. Next, please. All right, let's talk about the programs that we have. First, I need to give you full disclosure. I'm in an unusual situation. Delaware State Housing Authority's function is to advance the money for down payment and closing cost assistance. We call that the Preferred Plus. The purchase money loan is still made by the mortgage company, and they can use Freddie Mac or they can use the government loans. Where we step in is with the down payment assistance. Now, because of the problems that are occurring in Wall Street and because of the problems that are occurring with the financial markets, we actually have a temporary hold on the down payment assistance. Some of you may have heard that Delaware State is not in business or not working. It's not quite true. We still are doing the purchase money program, which in many cases can give a lower interest rate than the lender. We still have the tax credit. But what I'm going to explain to you now is on a temporary hold. I expect that my office within a day or two will be announcing a workaround and a resumption of the program. You'll have my email and direct dial phone number. So if you have any concerns about that and you want to follow up, please get the information from me rather than getting a rumor mill to somebody else spreading, okay? Now, how does this program work? It's available for both first-time and repeat buyers. Very, very important. We will do repeat buyers, and you may find that repeat buyers also need down payment assistance. They're not locked out of the program because they've owned a home previously. How's the money dispersed? How does it work? Whatever the loan amount is, they can request and work with the mortgage company to get a 2, 3, 4, or 5% advance of the loan amount of that mortgage. That's after the mortgage insurance premium added. So if it was a $100,000 loan and they're using a 2% option, $2,000 is what Delaware State would advance. On the other hand, if it's a $200,000 loan and they chose a 5% option, that's $10,000 that we advance. And that money's used for down payment and closing costs. We do not charge any fees for the program, and it's a 0% interest rate. Very important, 0% interest. It is a lien on the property. It is a second mortgage, but at 0% with no origination fees, No prepayment penalty. Excuse me. More importantly, no payments are due. So someone can take the loan, and if a year or two later they win the Delaware lottery, they can pay us off. All they owe is what's borrowed, no interest, no other fees. If they want to stay in the house, but they wish to start making payments to us after a year or two, they can do so. If they choose not to make any payments, the very last bullet point, no subordination, meaning if they sell the property or refinance to a new mortgage, under either scenario, Delaware State gets paid off just as they would on any other secondary lien when there's a refinance or a sale transaction. So again, just to recap, anywhere from 2 to 5% of the loan amount, we advance that to the closing attorney. No fees are charged, no immediate payments due. Therefore, the lender does not have to count it in the debt ratio. Again, a lot of information, but the website I mentioned, www.kishalandlordgoodbye.com, will explain this in detail, and it'll show much of the other information I'm going to share with you. In addition, Matt will be dispensing this to everyone. Matt, next slide, please. Right. Income limitations. All right. First off, the borrower needs to qualify for a standard loan product, whether it's an FHA loan, Freddie Mac, they need to qualify for that product. Once the lender has a qualification in that regard, now they're going to look at the household income. What is the household income broken down by county and size? It is not to exceed that amount. Not to exceed that amount. Very, very important. Not to exceed that amount. It can be less, but not greater. The maximum loan amount, all the counties, $417,000. No limit on the sale price, but the loan amount is capped at $417,000. Again, there is that website. I suggest you make a note of it. And when you have an opportunity, go through the website and just review that. Again, income limits are maximum. We are going to talk, though, about household income. It's a little bit of a twist. And if any questions come up, please, by all means, use the chat box. Next slide, please, Matt. Right. The tax credit. All right. Our down payment assistance is on temporary hold. However, the tax credit is something separate that's still available as we speak. However, because it's an IRS tax credit from the federal government, it is limited to the first-time home buyer. So my purchase program and my down payment assistance repeat home buyers can use, but the tax credit for the government's restriction is first-time buyers only, someone that's not owned their home in the last 3 years. How does it work? They will take the interest that's paid at the end of the year. They will convert a portion of that interest into a direct credit against what they owe Uncle Sam. That credit will never be greater than $2,000. It can be less each and every year. If someone were to stay in a home for 30 years, that's $60,000 that they'd be using toward their IRS taxes owed each and every year. It's a big chunk of money. Now, they must be a first-time home buyer, and they also have a different price level. Matt, if you go to the next screen there, you'll see that price level is different. It's lower than the one I showed you previously. So it is possible that an individual is a first-time home buyer, but if their income is greater than this chart, the IRS will not allow me to offer that to them. They just have to take our regular loan and down payment assistance. In addition, instead of a loan limit maximum, the IRS says we have to go by a purchase price limit, and there's those limits. So again, do not try and memorize it. Your mortgage company should know these already and be very familiar. If they tell you that they're not familiar with the Delaware State Housing Authority program, you may want to work with a different lender. When you go on our website, Kisha Landlord Goodbye, one of the tabs will say lenders, and there's a list of the approved companies that can offer the program in the state of Delaware to individuals looking to buy within the state of Delaware. We have no restrictions as to where they buy. I see one just came through. Is the DPA temporarily suspended, or if it? No, it is still available. Good question. When you go onto our rate charts, could Matt go to the next slide? It might be a rate chart. It's probably outdated. Oh, actually, no, it does discuss the income limits. You saw the first level, then you saw the second level. Because of Freddie's charter, Jim discussed this, okay, they are working for that low to moderate income level. So they do set the HFA advantage at 80% AMI. That's area median income. And you'll see that's broken down by your counties. Again, please don't try and memorize it. Your mortgage loan officers be well aware of it, and you will see it on the website. The 203K, yes, we do offer that. What that is an FHA loan product, and it will allow the individual to purchase the home, and at the same time, the upgrades of the home could be rolled together as one loan. We do have that available. The pricing is shown, and that one gives you an option as a 203K by itself or with the 5% assistance. So even if somebody was looking at a property that needed very minor work, such as paint and carpeting, a couple thousand, that's considered a streamlined FHA, and someone could use that program to access our down payment assistance. But again, I cannot stress enough that this is a temporary interruption. We intend to have it restored in one form or another really soon. I'm expecting an announcement in the next day or two will go out. Next slide, please. Yeah, there is one from a while back, and you can see at that time we did have the down payment assistance listed. The interest rate is higher on the purchase money loan as you advance more and more of our money, the 2, the 3, the 4, the 5% option, okay? Again, the rates are posted every day at 10 o'clock on that same website. And you will see there that the very bottom, the 203K unassisted, the 5% option, they were available back on January 11th. You still see them today. Unfortunately, as I'm sure you're all aware, at much higher interest rates, those upheavals in the market is what has caused a temporary interruption with Delaware State offering the down payment assistance. I don't want to bore you too deep here. Many other states use taxpayer money, and they take the taxpayer money and that money's given out as down payment assistance. States that are using taxpayer money can still offer it. We sell mortgage-backed securities, bundles of loans to Wall Street. We are not using Delaware taxpayer money to fund our programs. We have to earn our living, so to speak. And right now on Wall Street, it's a tough time to be a housing finance agency. Next slide, please. Right, I mentioned about household income, really important. When the lender's working with your prospects, the lender is only going to look at the income of those that are going to be on the loan, husband and wife, father and son, whatever. However, the IRS says that we have to look at household income when we try and fit people under those guidelines. And household income is all income from anybody 18 and older in the property. So if at some point you are discussing with your prospects about buying a house and they indicate their uncle will be with them, it's probably likely that uncle is on Social Security, pension, something of that nature. You do not need to delve into that, but you do need to let the mortgage company know there may be someone else in the household other than the borrowers, and we want to have copies of that income to verify that they fit under those limits. Jim talked about some of the work that's available and the resources through their credit center. Really important. That's a free service. Your prospects do not have to go on some late night infomercial and pay somebody to fix their credit when the program's available through Freddie Mac. Will do the same thing in a much safer and straightforward manner. We do request a minimum of a 620 score. So we were not unreasonable, a minimum 620 score. The exception would be if the individuals are looking at a double wide manufactured home. We do offer that option. It is an FHA loan product only, and it is a minimum of 660. Now, regarding the score, I believe, Matt, the next slide, please, we'll talk about the counseling. Although the minimum is 620, if your prospects are 659 or lower, 659 or lower, they will have to attend the counseling, and a list of those counselors that are in Delaware, local counselors in Delaware, is on that list right there. The mortgage company, as soon as they run the credit, they realize that they should be looking at it, but you may want to touch base and said, hey, has it been scheduled yet? Because I will tell you, due to the market conditions, counseling agencies are really busy. So it's important that once you realize the score issue, the need for counseling, get involved with that right away so they get set up for the counseling. Next slide, please. I think we've reached the end of that. I wanted to take just 1 or 2 moments if I could. I appreciate your time and attention. When you are looking at our programs, I don't expect that you understand them as well as the mortgage company. If you wanted to understand them that much, you'd be working for a mortgage company. But I do want you to understand the big picture of how the down payment assistance can create business. If you have individuals with reasonable credit, 620 or greater score, they fit under those income limitations. They may be a first-time repeat buyer, right? If the only thing holding them back from pulling the trigger is they don't have enough money for down payment and closing cost, you can make that transaction happen now by being aware of what we can do. Another thing, we do not look at assets. Let's say you have someone that has more than enough money for down payment and closing costs. They don't need my down payment assistance. But meanwhile, they find a property that they're going to have to bid $5,000 more than what they were pre-approved on. All right. The mortgage company is not going to allow you to finance $5,000 more than the appraisal or the asking price. Okay. If that individual had the block of money, they could take their personal money set aside, use that to make up the deficiency, come to Delaware State for the difference. So again, that's how you can make a transaction happen. Another scenario, you have prospects that find a house, they have plenty of money for down payment and closing costs. They do not need my money. All right. They find a house that's exactly perfect the way they want. The only thing is they say, gee, I wish there was all new appliances and I don't have a couple $1,000s to buy new appliances at this moment. Take some of their personal money, buy the appliances, come to Delaware State Housing for the difference. Final thought. Let's say someone is totally qualified, but they don't have enough money for down payment and closing cost. But at some point in the future, they're going to get a bonus. They're going to get a raise. They're going to transfer bonus. They're going to get a settlement. They're going to get some type of cash infusion, but not for so many months down the road. Come to Delaware State now. Make the transaction happen now. And down the road, when you get that block of money, you turn around and pay off the down payment assistance because, as I said, no prepayment penalty, 0 interest, and no fees applied. We try and keep this program simple and straightforward. That phone number there is my direct dial number. If you're ever told something about our programs or something that doesn't sound quite right or you're uncertain, please call me or email me so that I can work with you to clarify any questions you might have. Are there any other questions in the chat? It does not look like it. And Matt, if you want to open it up to questions, either by chat or a voice, I appreciate everybody giving time to me today. And I want to thank Matt and the DIR for hosting the series and also for Jim, the partnership that you give with us. Thank you all.
I don't see any questions in the chat. If anybody has any questions, now is the time to ask.
Yep.
Will the PowerPoint be sent out? Yes, both will.
Yeah, that was a great presentation, Bill. And I would just like to reiterate what you said. Bill and I aren't in the business to turn realtors into mortgage originators or mortgage underwriters. You chose to go into realtor profession because that's what you wanted to do. But we're all in this together, and with all the issues right now, within the industry, it's just so important for us to all have synergy and work together. And like I portrayed to you on that bubble chart, there's just so many people involved in the home buying transaction and the mortgage application process for these consumers. So, each loan is precious right now. We can't afford to make any mistakes, and knowledge is power. So the more you know about these mortgage programs, what Freddie Mac's putting out there in the marketplace, what DSHA is offering out there, the better you're going to be, and you'll be ahead of the competition out there. And like I said, please use those resources and tools that Freddie Mac provides to you as real estate professionals and to your clients, because again, it's great information. I know, again, I have a 29-year-old son who went through the home buying process last year. He was on all those social media sites like I told you about. And, you know, Pop has been in the industry for 36 years and he was, you know, kind of staying away from me. But, you know, I told him, I said, go on Credit Smart. If you don't want to listen to Dad, you will find great information on there. And I said, just run, you know, the mortgage companies that you're dealing with by me and the realtors by me, and I'll let you know if I know them and if you're going in the right direction. And he did go on Credit Smart. He used it, him and his fiance. They thought it was great, and they made a, you know, great relationship with a realtor here in Cherry Hill, New Jersey, and they went through a really good mortgage company, and they became homeowners last June. So it, you know, it's different out there. Yeah, you know, and if we have any millennials on the line, I'm not talking bad about you because like both my children are millennials, and I've learned a lot. And like I said earlier, I said you just don't want to sell homes to people in my age bracket. You know, millennials are the market right now, and we just need to understand, you know, how they go and get information. But eventually they will talk to us. And Bill, do you have anything to add on that?
Yeah, actually, it looks like we got a couple more chats coming in.
Oh, great.
Yep. Yes, the PowerPoint will be sent out. I think Matt did address that. Veronica is asking, can your programs be combined with other local DPA programs? Veronica, good question. Yes. Delaware State takes a second lien position, just like a home equity line or a secondary mortgage. However, if the local DPA, which could be a county, city, employer-based DPA, as long as it does not require a lien, it's some type of grant, you can certainly combine them. I've seen that a number of times where something in that fashion is put together. I did mention an error again, and I'll tell you now, a good resource site you want to use is www.downpaymentresource.com. www.downpaymentresource.com. This is an aggregator site that will list all the different programs available. It will not ask for your social security number or your credit card. It's legit. I've worked with these people to make sure that our programs are updated. It will ask you questions. Are you a veteran? Do you want to live in Newcastle County or Kent County? As you ask the questions, it will then narrow down what's available based upon that. It's a free service. It's an excellent service to take advantage of. I hope that answers the question. There was another one up. Susie's giving a shout out to Jim and your website, says it's great stuff.
Thank you.
Ann was giving us a thank you and a shout out. Great presentation on the FM Freddie Mac DSHA buyer side. Any info or contact on the Freddie Mac side for the opportunity to list Freddie Mac homes? Jim?
Not that I'm aware of. I can research that for you. If you want to email me directly, it's james_hall@freddiemac.com. But off the top of my head, I don't know if we have a listing service, but I can dig deeper on that.
And Veronica did post the downpaymentresource.com for everybody. Thank you, Veronica.
All right. Well, I don't.
Anything else from anybody?
Questions.
I think that's a wrap, folks.
Yeah, Matt, thank you. Okay, it's great. Great partnership here. We really appreciate the opportunity to, you know, to speak to your members and audience. Thank you for taking the time out today.
Sure. I'll be sending a follow-up email to all the attendees. Our third webinar in this series will be on May 11th at 10 a.m. And it will discuss Freddie Mac's Home Possible and Home One mortgages. And I'll include a link for registration in my follow-up email as well. All right. Thanks, everybody.
Great.
Thank you, Matt. Thank you all.
Thank you.
Have a
Have a
great
great day.
Great day.
Take care. Bye-bye.